Hi everyone, I'm Ken from CryptoTradingKS. If you're new, a very warm welcome and welcome back CTKS family. Here you'll learn how to become fearless inside financial markets to assist you to become more of a financial and emotional blessing to yourself and those you love. In this video, I'm going to explain exactly what happened to Bitcoin. I'm going to take you through a post that I did on X about 12 hours ago that explained that this kind of thing was potentially incoming. The probability favored a retracement across all markets. I want to equip you with the mindset that you need to be successful in periods like this. If you have a structural knowledge, you'll be able to understand the way the price is moving literally a month before it moves there. You'll also find that it's really common for your mindset to be your biggest problem when it comes to trading and investing. I'm going to give some tips on how to overcome that and how to have a bulletproof mindset. There are so many rules inside the crypto market. If Bitcoin is coming down, you can bet everything is following it. It's so important to be prepared and not scared, to understand the rules of financial markets, and there are many of them. I want to give you a really good insight, and I'm not going to hold back in this particular episode. I want to make sure that I'm being really clear about the things that you need to be successful. Having been inside financial markets for nearly 4 decades, I'm sharing my hard-won experience with you. I wish I had the capability of listening into somebody who had decades and decades and decades inside financial markets and was sharing a smart money mindset, not from a retail level, but from a professional level. Unfortunately, when I started, YouTube didn't even exist. If you like the content, please subscribe to the channel and don't forget to smash that like button. All the indicators that I use on the daily video come from the service inside CTKSMethod.org. Let's run the numbers. About 11 hours ago, before the sell down in Bitcoin and across crypto, I put out the timing cheat sheet. Timing is all about getting an edge on the market. There were red alerts all over the place, the DXY, dollar yen, the yields, gold and silver, and probably a really big one, Apple. I've been talking for a while about dollar reversion and yield reversion. Bitcoin and total crypto market cap and the alts had a lot of forward momentum on the ETF event, but Bitcoin cannot escape the stock market's gravity. The issue is, if you've been doing your cheat sheet, you already knew that there was a lot of positive pressure coming in on things that we don't want positive pressure on. When the DXY and the yields come up, that's really bad news for the stock market and for crypto. If the DXY surges and the yields surge, this will put enormous negative momentum inside the stock market, the crypto market, and the commodities markets. I also wanted to let the service members know that Bitcoin Total, the DXY, the SPX, the US 10-year, and Solana have been released over the past couple of days. I wanted to do an express release because the videos do take a lot of time. It's more important that you have the indicators. You can see those particular ones that are released. They have this recycle symbol on them. Total Bitcoin, S&P 500, the DXY, the US 10-year, and Solana. I know that many people love Solana. What happened to Bitcoin in the past 24 hours is fairly straightforward. It had a lot of structural overhead resistance, and I'll get into that in a moment. The other thing, the main markets were weakening, and that's why I showed you the cheat sheet first. A lot of people only look at Bitcoin or only look at their cryptos and don't look at the main markets, commodities, Forex, and the stock market. This is a really big mistake. That's because of Rule 446. All markets are intercorrelated and interdependent. Practically, this means if you're just trading inside crypto and you are very unaware of what's happening in the Forex market, in the yield, the bond market, in the stock market, commodities, you're in a lot of trouble because you're very much blindsided. That's why I brought out the timing cheat sheet, and that cheat sheet is available free of charge. You can get the free printable template at CTKSMethod.org. Before we get into what happened with Bitcoin, I just want to make a little bit of a note about the CTKS method paths. At the start of every month inside the service, I draw up these CTKS method paths to estimate where price can end at the end of the month. When we look at Bitcoin, the ending point for the December rally was up about 18.9%. We just missed that by one day. When we look back to November, the normalized price path predicted a closeout at 40,498, about 16.71% up. That missed by about 3 days. When it comes to crypto, it's very, very hard to predict where price can go. That's why you need some kind of directional assistance. This is how we do our timing and also how we do our synchronization. Just make a note, 19%, about 17%. To get synchronized in with the markets, you need to understand where the Tier 1, Tier 2, and Tier 3 charts are going. If you understand that, you're ahead of 95% of other people. You're literally moving into Zone 3 straight away. When it comes to Solana, the CTKS method paths, which are you can learn how to draw these in Level 2 standard certification. In November, there was a predicted 84.54% increase. We just missed that by 7 days. In December, we predicted a 68.75% increase. We got that 9 days early, and it pretty much closed out where we anticipated. These are fairly big percentages, 85%, nearly 70%. But this is the power of the CTKS method. How we draw these paths is through a knowledge of CTKS structure. We mark up all of price history, and then we look at what the structure is telling us. You can see these percentages are very different from the percentages on Bitcoin. Do these paths apply to things like the DXY? Absolutely they do. You can see that the DXY negative price path was hit 3 days later, well, a couple of days later, and the negative price path on the DXY for December was hit 1 day later. Note the percentages, down about 2.5%, down about 1.71%. These paths are drawn at the start of the month and they are never changed once they're drawn. That is, we use CTKS structure to look inside a chart and predict where it's going by the end of the month. You can see all of these different charts are different percentages. What the commonality is that we look at CTKS structure, which is the world's most powerful smart money buy and sell level detection system, and you can see how incredibly well it works. When we look at total crypto market cap, we anticipated in November a 17.97% rise. We just missed that by 3 days. And when we look to the end of December, we expected total crypto market cap to come up 23.76% to 1.727 trillion. It missed it by 1 day. This is far better than just guessing. What about another example? How did it play out with the Tier 1, the US 10-year yield? We were expecting an 11.17% closeout to the month. We got it a little bit early, so that was pretty much bang on. What about the closeout of December? Around 7% down, 6.92% down. It closed on it exactly. You can see all these percentages are different, and we're applying this to the stock market. We're applying it to everything. The reason that I showed you those CTKS method paths, they're very good predictors of where price can go. What I'm going to do now is just to explain what happened to Bitcoin. A lot of people think that it's manipulation and they think it's a whole lot of things. Actually, it's structural resistance, and I'll just explain it a little bit more. Let's just zoom in here. This is the updated indicator. What you will find through Objective Dynamic Market Structure, or ODMS, all of these structural resistance and structural support lines will change every single period. That's what they do. The nature of support and resistance is not static. A lot of people would have you believe that structural support and structural resistance remains the same throughout the year. This is incredibly false and misleading. It is changing all the time. When you get a confluation or a conglomeration or aggregation of structural resistance levels, especially the thicker ones. The thicker means stronger, the thinner means weaker. But when you get a grouping of these together, it means the price will react very negatively to it. And what we saw with Bitcoin just recently, it passed through this 43,995 level of structural resistance and then got caught trying to turn this 45,418 level into structural support. But because there was so much overhead structural resistance inside the market, it couldn't maintain it as support. If it can't maintain it, if it can't get above, it's going below. And when we get cut overs and cut unders, they're very important signals to be aware of. What actually occurred right now is that we've passed through a very strong level of structural support at 44,000. This structural support level, we would expect that Bitcoin would come up and tap it, and if it's going to resume down, it will do so. But these levels are magnetized. They're acting like safety nets inside the market. By a knowledge of these structural resistance and structural support levels, you can mark up the paths that I showed you. You can do what I do. What happened with Bitcoin, as it came down, it found more and more safety nets. There was a very strong probability of negative price momentum inside Bitcoin. I explained that in the last couple of videos. We've got to think about the bankers not being our friends, because they're not. SEC Chairman Gary Gensler is not a friend to the crypto space. As soon as the Bitcoin spot ETFs are approved, and they will be approved not when people think that they will be approved, but when the big boys have filled their bags. This kind of negative price momentum is to be expected at times like this. The top end of town tends to play a lot of games with retail investors. They know that retail are emotionally driven. If the price goes down, they're out. If the price comes up, they're in. They use this equation to manipulate the vast majority of investors and traders. As soon as the price starts to go up again, a lot of people will FOMO in. This is something to be aware of. The institutions push the price up to draw people in, to liquidate them later. And when we look at any specific price chart, this is always the way. This is why we must know where structural support and structural resistance levels are. We're literally looking at what they're looking at. We need to gain an edge so we don't become a victim of the top end of town. We need to understand when there's a lot of structural overhead resistance and we can't convert an area into structural support, it is going down. If you're using CTKS principles, you've already done really well on this long tail rejection down. What is Bitcoin going to next? It's currently 42,955. It's very straightforward. If Bitcoin converts this level at 42,865 into structural support, it's coming back to the 44,000. If it can't maintain this level, it's going down to 41,525. This is a very easy way to know where price is going. If it can't get above, it's going below. And if it does get above, it's going to the next one. How could you get anything more simple? If you would like this indicator for Bitcoin, and of course there's so many other ones there, all the tier 1, tier 2, and tier 3, you can just pop across to CTKSMethod.org. I recommend that you download the free printable template of this CTKS timing cheat sheet. You really want to know when there's negative momentum inside the markets. Last week, we saw that Apple was getting weaker and weaker. It did a cut under, and of course that negative momentum pushed everything down. When Microsoft comes down, you've got to think the biggest fund managers, the biggest hedge funds, the biggest money managers, the biggest corporations in the world all have Apple stock. And of course, retail has a lot of Apple stock as well. When Apple comes down, it's a shot across the bow. It basically means there's a weakness inside the market. And when we see the DXY, the dollar-yen combo, the euro dollar, the Aussie dollar getting weaker as these get stronger, the yields increasing in positive momentum, and the US 10-year yield is particularly concerning. That's why it has been express released. If you don't know the intercorrelations and interconnections between the macro factors, the stock market and crypto, even if you're just trading, for example, only in Solana or only in ADA, you're making a huge mistake because you'll tend to buy and sell at the wrong time. You won't understand the momentum that is occurring across the markets. This is really what people do not want to hear. They want to hear, oh, you can just look at this chart and you'll just know everything that's going on. This is not true, and it's never been correct. I've been inside financial markets for nearly 4 decades. I started off the same way that everybody starts off. Whatever you put money into, you just look at that. And then you suddenly discover, maybe 6 months, a year down the track, that you need to look at other things. So you look at comparative things. And then a year or two after that, you just figure out, well, you need to look at yields. And a year or two after that, you need to say, oh, I need to look at the Forex. And a year or two after that, you say, oh, it's all tied to the stock market. And a year or two after that, it's all tied to crypto. Everything is intercorrelated and interdependent. If you neglect one facet of this picture, especially the timing picture, you'll find that you get wrong-footed all the time, and you will not know why. This brings us to a really important point. I can always tell who will be successful inside financial markets, because if they're emotionally driven, especially anger driven, I know that they're going to make losses no matter what. Financial markets don't care if they're unfair to you. They don't even know you, and they never will. There's no point in panicking or blaming or getting upset. Why is that? Because it just doesn't work. We've all gone through it, but just go through it as fast as you possibly can. We need to get into the learning. We need to understand probabilities. The probability 12 hours ago was the crypto market would retrace because of all the dollar strength and yield strength. These macro factors just flow into the markets. Understanding all the rules, what you will find when you make a loss, you haven't done anything wrong per se by yourself. You don't and you shouldn't blame yourself, and you definitely shouldn't blame other people. What it's all about is just uncovering the rules of financial markets. There are so many rules, and when it comes to probability, that means probability doesn't mean certainty. Certainty is 100% probability. Probability is less than certainty. Probability is realistic. Certainty is just a fantasy. Inside Zone 1 and Zone 2, people are incredibly lazy. They don't want to put in the hard work. They don't want to do what would push them forward. They do something akin to gambling. They put their money all over the place. They aim at the dartboard, never knowing where the dartboard really is. They're very random. When they go in, they're like a light switch. They go in, all in and more. And there's a lot of people out there that will promote that method of thinking. Instead, you want to be really surgical. You come on and off like a dimmer, not a light switch. You place your positions at structural or between structural levels underneath price to get on the right side of the percentage. And then you gain specialization. If you think about Warren Buffett has the majority of his portfolio in Apple. And you can be assured he's been reducing his position. Elite investors and traders, and all investors become traders, and all traders need to know how to invest as well. The elite, they focus, they are not scattered. Inside Zone 1 and Zone 2, everybody's chasing every single opportunity that they can chase. It's far better to focus in on the major names, those names that you can throw any amount of money at, literally millions or tens of millions of dollars, when you get there, and you can get there if you focus. And those names will be able to easily absorb it. Inside Zone 1 and Zone 2, people pick really low liquidity, not just stocks, but also exotic Forex pairs and cryptos, very low liquidity. It means that you will be damaged on your spreads and you cannot get out when you want to get out without being severely financially penalized. That's why tracking the top and investing and trading in the top, just focusing on understanding what they're doing, that's the way to succeed. That's how you grow a large account. You might say, Ken, I don't have a large account. I only have a small account. How do you get a small account into a large account? You start thinking from a large account perspective. Many people are going to be rattled by this downturn, but we anticipated the downturn. It's important not to have a victim mindset. How do you know if you have a victim mindset? It's really easy. You'll be angry and angry all the time because you feel disempowered. The key is to have insight and understanding. If you have insight and understanding, you're focused on learning. You realize that everything that's handed to you, no matter in relationships, work, finance, friendships, it doesn't matter what facet of the diamond of your life it is. It's all about learning. You step up and you own the lesson. When people blame, they disempower themselves. They feel entitled. They're like little children who reach out and say, gimme, gimme, gimme. This is not where you want to be inside financial markets. If you're thinking about this, you will lose the lesson and you will create other problems and compound your losses. You want to do it completely differently. You want to be kind to yourself, realizing that any losses that you suffer in life or inside financial markets, they're not personal. It's just that you need to know the rules. You need to embrace probabilities and you need to think with a large account mindset, not with a small account mindset. Small accounts take so many risks, they blow their accounts up. That is, they destroy them. Time and time and time again. It's also important that you forgive yourself. In order to be empowered, you must have a positive mindset. Unfortunately, this world has an epidemic, an absolute deluge, a plague of negative excellence behaviors. Instead of doing these green box words, they have red box words. Instead of being kind to themselves and others, they're ruthless, they're nasty to themselves and other people. One thing that you will always understand when you get further progressed along, being kind to yourself is the basis of profitability inside any financial market. If you cannot be kind to yourself, you cannot learn. And if you cannot learn, you will continue to make losses. Those losses will compound. The market is simply handing you a learning lesson, a lesson. Those losses are typically that you're bought into mainstream media hype. Always remember, you must have 3 simultaneous strategies playing out at exactly the same time. Just know what you will do if price goes down. Will you buy more? Will you layer in? Will you panic? Will you freak out? Will you sell? You need to know what you're doing. What about if price goes neutral? It just goes nowhere and it does that for a period of time. Do you know the structural support and resistance levels? Do you know what's actually happening there? Can you trade up and down between structural support and structural resistance levels? That often is an incredibly powerful and very profitable tool. What about if it goes up? Are your levels set like an investor's level? Are they set like a trader's level? Are you running out of stock? For example, are you running out of quantities to sell? This is where the investor/trader mindset just becomes unbelievably powerful. Your focus is to get synchronized in with the market. I saw so many comments of people getting synchronized in with the market, understanding these red alerts were potentially throwing negative price momentum on every single market, and they've done really, really well. If all of this looks really confusing and too much for you, that's an absolute flag that you need to learn about it. Many people think that financial markets are just like casinos. You pop in, you put your money down, and you get rewarded or not. This is not the case. If you have the knowledge, if you have the strategies, if you are out of the zone 1 and zone 2 mindset. And I know so many educated people, so many really good souls that are trapped inside zone 1 and zone 2 because they can't lose their anger. They can't lose their blame. Blame has become the hallmark, the foundation of their life. But financial markets don't care if you blame. If you blame, they're going to mercilessly take your money. Many professional traders and investors will always say, the markets will lay you bare. That is, you'll be forced to confront yourself. It's very easy to break out of the doom cycle and get rid of anger and hurt. All you need is awareness and understanding, gaining insight. A lot of people say, no, Ken, I can't do this because I can't be to blame. I lost all this money. It can't be my fault. If it's my fault, that means I'm letting so many people down, including myself. Actually, you can think about it a slightly different way. You can think about that loss being a tuition fee. In fact, we actually have a rule on that, 2.12. Markets demand the tuition fee of losses. If you're getting a loss, make sure that you don't pay more for that tuition fee than you already have. If you ignore the tuition that you're given, the fee will keep on growing. This is why we need insight. One of the best things that you could ever do is just to download this timing cheat sheet, which is absolutely free. Just keep an eye on how different charts are moving, and you will find that you get more and more in synchronization with the market. When you're in synchronization with the market, you make profit. It is that simple. We even have a rule for that. Rule 603, synchronization profits. This is how you profit, and it's the only way. From a synchronization perspective, please keep your eye on the DXY and see what it's doing. When the US dollar currency index comes up, the rally takes its steam out. You can see the DXY was falling and falling. This is exactly why the markets were rising for the past 2 months. You want to be your own financial advisor. You want to be able to look at the charts, especially with structural support and structural resistance levels, to know how far momentum can take something. There's a very strange rule as well. You are typically safest in capitulations. If you know where the structural levels are and you fraction your amount of money that you're putting into any specific chart, it doesn't matter if it's crypto or a stock or commodity, it doesn't matter. The same rules always apply. Just know how much is comfortable for you to put in, and then you can put some money around the current levels. And always think, if the market is weakening, if the timing is throwing red alerts everywhere, push your levels down to capture lower level rebounds. We can already see on Litecoin from this bottom until about here, it's nearly a 16% increase. Money can be made, a lot of money can be made in capitulations. They're not to be feared, they're to be looked forward to. Wow, that's counterintuitive, isn't it? The link for my Twitter feed or my X feed is in the description of this video. So please just follow me because there's a lot of good information I share. I'm not that prolific in terms of posting out something every hour like a lot of people on X are. What I seek to post out is the stuff that really matters. And don't forget that you can grab this free printable template. You'll get the 25th of December release version. I'm always improving this because I want you to benefit as much as possible. Do whatever you can to move out of Zone 1 and Zone 2 where we lose money. Everybody goes through these zones. I went through them as well. It's just the nature of the beast. But please get out of there as soon as possible. And always know how you do one thing is how you do everything. If you're angry and hurt all the time, it's because you're blaming. If you're blaming, the financial markets will destroy you. So it's simple. Stop blaming and start learning. Know that losses aren't bad things. They just force us to reevaluate what we're doing. If you can't sleep because your position size is too large in the market, just decrease it. You need your rest. And always make sure that your focus is on kindness, maintaining inner peace and outer peace. Why is this important? People who do not have inner peace and outer peace and do not have kindness are restricting the capability for them to be successful in life. Remember, our anger always punishes us. And when we're angry, we cannot learn because we're blaming. Blaming and learning are opposite things. You either learn or you blame. That's why, as a little society, we are dedicated and committed. We know that we either win or learn, and we never blame. Blaming just makes us silly. It makes us naive. And it's really expensive because we'll keep on getting the tuition fees until we learn that it's not outside of ourselves, it's inside of ourselves. Please let me know in the comments, where do you think Bitcoin and crypto are going to next? What do you think is driving this down momentum inside the markets? And when you think about those answers, are you answering from an emotional level or from a scientific level of looking at structural support and structural